All right, awesome. So we continue to lesson 2 today. Any questions right now on like what we went through last week or anything that pop up for
No, I feel like it was super diligent and gave me a lot better understanding of like just an overview. So
okay,
that was perfect. Thank you.
perfect. All right, so like I mentioned last week, we're gonna get into pretty much understanding charts, right? And
Mhm.
basically, that's technical analysis. And like I mentioned before, the type of trader I am, I'm a very technical analysis type of trader. I trade the chart. Yes,
Mhm.
news might have influence here and there, but at the end of the day, the chart will tell you what's happening.
Okay.
So, so technical analysis, it's helps traders read charts and identify probabilities, not certainties. Now, what is technical analysis? So it's like you've been pretty much understanding what
Sorry,
the
Roxy, will you
candlestick does.
maximize the slideshow
Oh, it's not
or
maximum.
press slideshow? No, if you press slideshow, maybe it'll maximize the
I
right now.
did. Hmm. Okay, let me stop sharing
So
again.
weird. Let me show you. Sorry.
No, no, no.
I just didn't want to like because you can see all the
Yeah.
other slides on the end and the wording seems small.
Can you see it big now?
Yes, yeah, that's perfect. Perfect.
Okay,
Thank
this
you.
is how I was seeing it.
Oh, so weird.
I know. Yeah.
Maybe it just didn't like come through.
Yeah.
Okay. Anyway, sorry.
Oh, no, no, it's okay. Thank you for that. So technical analysis is a study of price action. So a lot of what you were reading with the candlestick Bible is price action. Okay, the candlesticks will tell you what price is doing. It's going to tell you chart behavior, market psychology.
hmm
Now, that's so huge also because at the end of the day, if you really think about it, technical analysis, the candlesticks, the prices, the timing and everything, it's showing you data, but at the end of the day, individuals are the ones that are really moving the market. Why? Because they're the ones putting in and out. They're putting the money in, pulling the money
hmm
out, pulling the money in. It's not, they're
Yeah.
not bots, right? So it's people, individuals, bank institutions, coming in, coming out. So this is why psychology, when it comes to the market, is crucial because now you could see the behavior in it. And once we get into it, you understand more. So it's potential trading opportunities and probabilities. It's never a set in stone, oh my God, 100% accurate, right? It's all
hmm
probability. So we want to learn, like I mentioned before, charts will reflect supply and demand zones. Price actions leave clues through patterns and structure. And technical analysis focuses on probability, not predictions, and not
hmm
hope either.
Yeah.
Not hope either.
I love that.
I'm me, I'm a Christian,
Yeah.
Jesus lover, but one thing I can't do would be like, Jesus
Give
come
it to
through.
God. Oh my gosh.
Traders use chart to manage risk and improve decision making. So
Okay.
here, this is kind of a little bit of an idea of what a chart looks like. That's all you have to think about.
hmm
And this is all we really need to identify is where the sellers and the buyers are. Okay,
Okay.
you can see that in this chart. Now, this is my first time actually emphasizing more on the probability side of trading because I feel like a lot of us come into trading thinking more about like I always want to be right
Mhm.
or because it's the system, right? And
It's like
they
the
they
flip of a
program
coin.
that they program us that way, right?
hmm
But what is truly probability means. So I'm not going to go everything this chart has, but I'm going to definitely send these slides to you so you can actually go more in depth. But what I
Okay.
want you to think is probabilities, the higher the probability happens only when something is consistently being executed.
Okay.
Does it mean make sense? Kind of like
Yeah.
I'm trying to think about.
Like if you're analyzing the trends, following the trends, your probability that you will gain a return on your investment is greater than if you're just kind of going in blindly. But it's not obviously
Yes, it's
set.
definitely greater, but one of the things that happens
Mhm.
with traders, because remember the emotions come up, so
Mhm.
fears come up, securities come up. So
Yeah.
when you don't take the chance or take the risk, then you're reducing your probabilities of
Mhm.
getting good results.
Yeah. I think that's why it's like important to invest stuff that you don't mind losing because you are taking a risk at first, correct? I mean,
Yeah,
you're going
and
in with a better
anything in
chance.
life
Yeah.
though, right? Even
Yeah.
when it comes
Yeah.
to businesses, right?
Totally.
If you
Totally.
don't, the probability of it succeeding, what is it? But if you don't execute on
Yeah. You'll never know.
business plan, then how do you know, right? The
Yeah.
probability only increases as you keep doing it and doing it
Mhm.
and doing it.
Yeah.
Same that concept with trading. If you go in it and you're like, oh, this is a high probability, but you don't execute, then
Mhm.
you're not increasing your probability. You're decreasing your probability. So I've seen this going to 6 years of teaching it. I've seen how instead they feel like they're doing a good thing by not taking the trade because
Yeah.
they're like, well, I'm not risking anything, so that's a higher probability that I'm not going to lose, or I
Yeah.
might
Which
be
is like
right or
if you don't
wrong.
try, you don't know, and then
No,
you
you
won't
only
win
get
either.
me think about sports,
Yeah.
right? When I always think about Kobe, that guy till the end of days, he was still going out there and practicing his shots.
Yeah. Yeah.
He was increasing his probabilities. So when he does play a game, he makes the shot.
Yeah. Yeah.
Same thing here. So I always want you to think about that when you're going to get into it. It's going to be really big. It's like when you feel maybe a little scared or not confident because you don't know that much information yet, but
Yeah.
that trade is going to help you to the next step. So I wanted to emphasize on that.
No, that's very true.
So understanding charts. This is just an image, but we're gonna go to the real charts here. So now you know what, right? These are candlesticks. Can you see my cursor?
Yes, I can.
Okay. So these are all candlesticks. Okay. So if we look here to the right,
Mm-hmm.
these are prices. Oops,
Mm-hmm.
where did my cursor go? Oh, these are prices. Okay. If we look here, then time axis is here in the bottom. These are dates, okay, in the bottom. And then volume are all these blue bars over here.
Mm-hmm. And that just shows the pattern over the course of that time,
So
correct?
yeah, this is just an example. This is from like December 11,
Uh-huh.
okay, to May. So, and these are the prices. So it's kind
Mhm.
of like, when you were going math and you had to do those like charts where you had to match the bottom uh
Yeah.
the y-axis to the x and then put them
Yeah.
together. That's pretty much kind of the same concept here. So if we want to know what price was, this is Apple for an example, right? If we wanted to know where price was at for Apple and on April 1st, which is
Mm-hmm.
here, and then the price is here, so all I have to do is go boop boop boop, right, and then go this way. So it was
Got
about
it. Got it.
195. Okay. And then the candlesticks will show you mean the price where price closed and open.
Mhm.
Okay.
Okay.
Now let me go to the next slide.
And like you said, you analyze the week to kind of notice trends before you kind of set your parameters of where you go in and come out, correct?
Yeah, we're gonna go
Okay.
into that's what I call the top-down analysis.
Mm-hmm.
So we're gonna go into time frames as well, which
Got it.
is like the next crucial part of the foundation of trading.
Okay.
So then, hold on. Okay. Now let's digest candlesticks. So a green candle, right?
Mm-hmm.
You want to remember this. It's bullish, means price is pushing up.
Up.
Okay. Now, understanding a candlestick. So this little, I call them wicks. Some people
Mm-hmm.
call them shadows. I call them wicks.
Mm-hmm.
um, this is a wick. The top of the wick is going to show me
Got
where price got to, which was
mm-hmm.
the highest.
Mm-hmm.
Let's keep using Apple as an example. Well, which was the highest price that it hit, but it didn't stay there, but it did go up there for. So if
Mm-hmm.
we go all the way to the right, it's kind of around 104, right?
Got it.
Okay.
Now, when it's at the highest, is that when you try to get out?
It depends. It's gonna
Okay.
depend. So, because
I'll
we're
let you
gonna,
explain.
yeah, no.
Mhm.
These are all great questions because
Okay.
it's what we're doing is kind of like it's pretty much kind of like a math, right? You
Mhm.
learn addition, multiplication, division. So when you're into algebra or calculus, you
Mhm.
know how to use all that to get an answer. So right now,
Yeah.
candlesticks are going to show you one thing.
Mhm.
Time frames are going to show you another, and then the supply and demand zones are going to show you another thing. But then we're going to put all three together, and that's when entries, you're going to learn entries and exits and probabilities, and do I exit here or do I hold or and all that stuff.
Got it. Yeah, got
Mhm.
it. Okay.
So high is where the price got to.
Mhm.
Now close, this is where the actual, let's Apple close. So if we go back to
Mhm.
if we go to the right, that
102.
means it closed at 102.
Okay. That's like
Okay.
when the market closes.
Yes, exactly.
Okay.
Exactly. Then the bottom part of the body, so this is called the body here. The bottom part of the body is where price opened. So Apple
Okay.
opened, if we go to the right, at $97.
Mhm.
Okay. And then the bottom of the wick is the low of the day
And that's where you usually try to buy in
if we're bullish.
if we're bullish.
Yeah,
Okay.
yeah.
If
But
it's green, I mean.
yeah, it's green and in confluence again to an
Okay.
area where if it's a demand zone. Okay. So this is the low. So the low of the day was, let's just say $95.
Okay.
Okay. So now let's read the whole candle together. So let's say this is Apple, right? So the high of Apple, and let's pretend we're talking about for today and the market is closed. The high of Apple for today was it hit 104, closed at 102, but
Mhm.
opened at 97, and the low of day was 95.
So say if you came in and bought in at the 95 of the
Mhm.
lowest price that day and you like, decided to get out at close, you would have made the difference between the 102 and the 95 or the 95.
If you're trading just shares, yes, you would have made the difference of 95 to 102, which is
$7
$7 in shares, right? So if you're
shares.
just trading the share, but with options, a $7 move could be a lot of money.
Oh, and why? How
Yes,
is that?
because that which we're going to get into too, because remember one
Sorry, if I'm
option
jumping ahead, tell me I'm
contract?
jumping
No, no,
ahead.
no, no. One
Okay.
option contract, ask me if so it can, maybe that helps you make sense in your
Mhm.
brain. One option contract moves 100 shares.
Oh, so you would have made like $700
It
at
all
that point.
depends how much
How
the
many
contract cost
contracts you
you,
had? Yeah,
how many contracts you bought, how much was the contract. There's a lot of, that goes into
got
it,
it.
but
Got it.
that is the big difference between trading options and shares. But you
Got
got
it.
the concept correct. But yes, with option, you can make great money in a $2 move, you
Got
know.
it. Okay.
So
Okay.
that is
That's good
the
to know.
no, yeah, that's the pro. That's why a lot of, that's why we like options because you get more for your bucks. So now let's go to the other side. Let's go to the red side. Now the high of the day, the top of the wick is the same thing. It's the high. Apple was the high of the day was 104. That's whether it's green or red, it doesn't matter. Where things change is in the body. So you see how this one, the next thing, the top of the body is the open.
Mm-hmm.
Look at where the green one is. The open is in the bottom.
Mm-hmm.
The open for a red candle is in the top. So the
Mm-hmm.
open for Apple was 102.
Mm-hmm.
Over here, the open for this day was 97.
Got it.
And then it closed at 97.
So bearish, sorry,
Mhm.
I just want to make sure I understand.
Yeah.
Bullish and bearish, like, because I thought, okay, the red is like a bad, you don't enter like at a red.
No,
But
so
what's the difference between the two?
that's the misconception a lot of people have, that they think that because it's red, you don't enter. No, you can make money as the market is going down too.
Got it.
Yeah, you will be able to buy in as the
Mm-hmm.
market is going down with option contracts. Yeah, I
Got
know
it.
it's
Got
a
it.
little,
Yeah,
yes.
because I guess what's the difference between like a bullish being a low of 95 and a bearish being a low of 95?
That's no difference. That's just telling
Okay.
you the candlestick is just telling you price action.
Got
There
it.
was
Got
the
it. Okay.
high and the low of Apple for if we're looking at the daily time frame of the
Mhm.
day. So the low of
Okay, so it's
Apple,
just the difference of like the opening and closing.
which will make a big difference when you're actually
Totally. Yeah.
looking at the chart, because if it opened at 97
Uh-huh.
and it closed at obviously
Oh, I didn't even see.
price.
You have it on there, open and close. Sorry, I didn't even. Was looking at the close and the open and where they are on the bullish and thinking they're the same on the bearish, but no, I didn't look closely.
Oh yeah, no,
Open and
no.
close. Okay, that makes way more sense to me.
Oh
Okay,
yeah, yeah, yeah. Because remember,
it
a
just closes
bearish,
below.
that means the
Mhm.
price is going down. So it opened at 102 and it closed at 97.
97. Okay,
Right?
sorry.
So say no,
Yeah.
no, it's okay. Same $7 move, right?
So you
Is that what
lost.
we said?
Yes.
Yeah. So, but to the downside, but with
Mm,
option contracts, you can make money as the market is going down too. So you're going to play both sides.
how is that? How do you make money as the market's going down?
I know with option contracts. So there, we're going to get into those. It's called calls and puts. So you can
Okay.
buy calls, the market is going down, and you can buy puts when the market is going. I mean, calls when the market is going up, and then puts when the market is going down, and you can make money with both sides.
Oh,
Uh-huh.
okay. I didn't know that.
Yes, yes,
So sometimes
girl.
you hope it goes down if
So
you got a put.
it's like I feel like you're double dipping
Okay.
because you're able to one, make money as the market is going down,
Mm-hmm.
and then two, like for your long-term investments, you buy a bottom. You buy a better bottom. You
Mm.
add at a better bottom. So it's like you're double dipping. So this is why when you hear, or at least I hear, oh yeah, Wall Street, is down this much. You swear they call this hedging. So what they
Mm-hmm.
do is when they put millions of dollars in the market, they
Yeah.
hedge and protect their positions with um, puts, with option puts to the downside.
Mm.
So in case the market does go down, they'll still make some money.
Yeah. Yeah.
Yeah,
Okay.
and a lot of people just don't know that. That's when they say when the market is dumping and people are like,
Mhm.
"Oh, but the market is not good right now." I'm just like, we can still make money, but what you don't know can hurt you. I always tell people.
Yeah, that's true. There you go. Okay. That makes way more sense. That's good to know that you can play like the downside of the market too. See, that's where I'm saying like there's
Yeah,
opportunity everywhere. Like you just got to find them.
and there's opportunities almost every day.
Yeah.
The market.
Yes.
Yeah. Yep. Yep. So you make money upside or downside. It doesn't matter. That's why for us traders, we don't care what the market is doing. Upside,
Yeah.
downside, sideways, we're gonna make money.
You're going to find an opportunity zone and you're going to make the money within that opportunity zone.
Yep, that's it. So now I'm gonna show you this on a real chart.
Okay. This is so fun, by the way, learning this
Yes.
stuff. Yeah, like
I love
I
it.
like look
Good.
at Instagrams of like following like,
Yeah.
people talking about this stuff all the time now.
Well, yeah, especially because you're learning it, all of it
Yeah.
is gonna come out. So let me, okay, so I'm gonna share my screen. Mm, hold on. Okay, good. I was just trying to remove my account number. I don't want it to show. All right, there we go. All right.
Nice.
So here goes a chart. Okay, in this case, this is QQQ.
Hmm.
Well, let's look at apples since we've been using Apple as an example. And we're gonna go to the daily time frame. Okay. Okay. All right. So I am gonna go into time frames after the candlesticks, but for now, know that we are in a daily time frame. What does
Hmm.
that mean? Each candlestick you see
Hmm.
represents the movement of one day.
Got it.
So
Okay.
this is a candle for today. Is this bullish or bearish?
Bullish
Why?
because it closed higher than it opened.
Okay. What else?
It's green.
Yeah. I know they're
Oh, that's
really,
it?
but that's it.
Okay.
Yeah. I'm
I was
gonna be
like,
very
it's
just
green?
know something about me. I'm gonna do that a lot. I'm gonna ask you why and why and
Okay,
why
no,
and why.
please ask me, quiz me. Like,
Yeah. Okay.
okay,
So now,
green and it closed it obviously. So wait, but I guess that's where it started. Okay, okay, never mind. I get that. So like the
Mhm.
red, like for what day is this? 5/4. Apple obviously opened at 280, closed at a little above 270, 276, is it? Yeah.
Yeah, exactly. Yeah.
Okay.
So today we opened at
So today
270.
was a good day.
Yes, it was a nice bullish day. So to 276.86. The
Mm-hmm.
low of the day was the bottom of the wick, which was
Mm-hmm.
276.41. The high of the day was the top of the wick, so that was 284.57. And the closed was 284.21. So we opened at 276.92 and we closed around 284.16. So 76 and 70. So like a $7 move too. That's so funny.
Dang. And then you
Ooh,
could have had like
sevens.
so many. Yeah, look at
I
sevens.
know we're getting sevens.
Jesus number. I
So
love that.
it was a $7 move today.
Okay.
Now, yesterday, we got a red candle, and I don't have it filled in. I could, I'll do it
I know.
just
Does the fill in and not fill in make a difference?
it's very personal preference. I
Oh,
could
okay. But
change
it's
that.
not like a
No,
difference in like the market.
no, I could just go and
Okay.
fill it in. I'll just fill it in so you can see it.
Okay.
It's just a visual thing. I don't know. Like there are some people that remove the green and the red because it's a psychological thing.
Got it. Got
If
it.
they
So they
if
don't want to see so much red. They'd rather just see the outline.
Yeah, because it
Totally.
creates fear, so they
Yeah.
rather not see the red. So it helps them
But I always
pull the
feel like, okay, as I look at like this, what is this, like a week view right here?
this
Or like a little longer?
is
Kind of
um
like a week view that when we had it zoomed.
well, this is
It's
the
like, okay,
daily, so more than a week.
the
So
can yeah, so the candlestick, yeah, now we're at like a couple weeks or
so it
so.
could go like that, yeah.
Yeah. But if you look at it, it's like, okay, I can see where people get discouraged of like you had a bearish day, but there's always a bull coming. Like if you look at this
Oh,
thing, like you're always gonna get your money back.
well, no,
It's
that's the thing. It's remember they could play the downside too, and still make
yeah,
money.
I was gonna say if you played the downside on what's this day, 3-2, all the way over here, this big red candlestick, all the way at the end, that one,
Yeah.
you would make a
So
lot of
yeah,
money.
but see, but like it's once you see it live, like how
Mm-hmm.
would you know that it's going to go down?
Yeah, you
Because
don't.
we're looking at the daily time frame.
Mm-hmm.
So it's easier to be able to see, oh, if we had a bullish day. But if we once we narrow it down to the smaller time frames, we're gonna
Mm-hmm.
see a lot of green and red candles during the day.
Got it. Got it. So you
During the
see it
day.
go up and down
Yes. So
all
you're
day. And
like,
that's where you need to figure out when you come out.
that's when technical analysis comes into place.
Got it.
And
Okay.
learning technical analysis because you need to know when to
I
enter.
see a lot more green than red. This is great.
Yeah.
But I guess when you're looking at the day, that could psychologically be a lot.
Yeah, it's easier than versus once we go into smaller time frames, you'll see the difference. And plus, I have lines marked up here.
Hmm.
You won't have anything, and you're gonna learn that part too, on how to
Okay.
identify areas where sellers are and
Hmm.
where buyers are at.
What do you have lines for? Just to show market trend?
So like depends what line. Like this, obviously, it was uptrending,
Hmm.
so I was more bullish. I always say the trend is your friend.
Hmm.
So if it's uptrending, then I'd rather be take bullish setups versus bearish. Not that I
Yeah.
won't, but I would prefer. These lines tell
Hmm.
me, for instance, this one, which I'm going to teach you,
Hmm.
this is a supply zone.
Okay.
When it was a supply zone, when the candlesticks were below it.
And that's where you have a lot of
Okay, but
stuff.
now it broke above and it was kind of holding, but now the supply zone, which is the sellers are present, but the buyers came in so strong that ripped through the ceiling, and
Hmm.
now the supply zone became demand zone, which is
Hmm.
now where now buyers are present.
Hmm.
The value of Apple went up. It has a new lower high now. So now buyers are holding this price up here. So now this is why the price pushed in which I'm
Got
going to
it.
teach. Yeah. But I want
Got
what I want you to see now, going
it.
back to candlesticks, is do you see the different bodies?
Hmm. Hmm.
Full body, little red candle, green candle, you see the long wick?
Yeah, it got up really high, but then closed lower.
Exactly. Exactly.
Okay.
Look at this one. Big long wicks,
Yeah,
small body, full body. So this is
we
something,
like to see the full body green.
yes, or red. It doesn't matter. Like
Or red, if
green or
you're
red,
playing pull.
just
Yeah.
give us a good trend day, whether up or
Hmm.
down. It's what we really would like.
Yeah.
Now
Okay.
these candlesticks like this with
Hmm.
big wicks, top and bottom,
Hmm.
small bodies, they're pretty much like dojis. Well, they are doji. They like this is doji, meaning it's very neutral, nor the bulls um are in charge, nor the bears. So the prices vary. We call it choppy or
Got it.
consolidating. It's like for me, I try to refrain myself on trading something that has candlesticks like this. I don't,
Got it.
I like certainty.
Hmm.
I like high probabilities, and
Hmm.
these kind of candlesticks are not it.
Yeah,
This
because it
is
shows
kind
a
of,
lot of like going up and down in the
yeah,
day.
exactly. Yes, up and
Okay.
down, up, down, up, and then it's like, oh my God, it ended up. almost closing where it opened. We want
Yeah.
to, we,
So it just plays with your heart a little bit.
oh,
Mm.
a lot of it.
Oh,
So
and
this is
how do you
why,
know? So you will analyze a trend to know, okay, we're kind of more probability to have that kind of day versus a
yeah, this is why I like to
oh,
look at the bigger pictures because I
okay.
can look at the weekly, and
Hmm.
if the weekly is showing me, so like the weekly looks good right now on Apple. But
Yeah.
let's say I have a weekly doji.
Hmm.
I'm like, I'm just gonna stay away. I'm not even gonna bother to trade Apple or look at Apple, right?
Got
I'm gonna go look at another ticker that
it.
has
Hmm.
better price action and so forth.
Got it.
But right now, so far the weekly looks great. It is not looking like a doji. But
Yeah.
let's go back to the daily. So the more screen time you give yourself to
Hmm.
look um, at these candlesticks, the more
Hmm.
you're going to get used to them and understand what they're telling you. Because remember, what are they doing? It's just telling you where price close and open, high and
Hmm.
low. Close,
Hmm.
open, high and low,
Hmm.
right? So can you tell me, so like this one, right? What
Hmm.
was the low of
For
the
sure.
day, right? The
Low
low,
of the day was the 268. High of the day got to 275, but then it closed at what is that? Top 271?
yeah,
Yeah.
271.34, and
Okay.
it opened at 270.
Yeah. Okay, so if it opens at 270, okay, oh, then it dropped.
It
Then it went
dropped,
up, but then
hit
it
a
closed.
low,
Uh-huh.
pushed up,
Hit a
didn't
high.
hold,
So
didn't.
you kind of have to try and get out when it's at that high for the day.
Well, it's based on a lot of you have to have targets, right? Obviously, this will be a target, a final target, but
Yeah.
you're gonna have targets. And the way I like to teach is we first are gonna worry about, not worry, we're gonna
Mm-hmm.
learn how to, I always compare it to baseball,
Mm-hmm.
right? In order to get better at baseball, what do you have to practice, right? It's batting and batting to get to
Yeah.
what? Base one.
Mm-hmm.
Bat, base
Yeah.
one. Obviously, we all want home runs,
Yeah.
but
Yeah.
do they happen
But
all the time? No.
no, the probability is not so great.
But probability only happens every time they bat, right? So,
Yeah.
but at least base one, would you say there's more consistency to making it to base one or base two?
Base one.
So same thing in trading. I'm gonna like people to get comfortable and find consistency and then find their edge and strategy entry, and there's gonna be a stop loss. Base
Okay.
one. That's gonna be the first part. Because that's gonna be pretty much your cash flow. That's
Mm-hmm.
gonna be your money maker. Um, Getting good at that, like first level, I call it,
Mm-hmm.
because if you can start making, I don't care, 5 to 10, 15% to base one each every time, like, I mean, all you need to do is per whatever. If you want to make a quick $500 and you know that you usually make anywhere from 5 to 10%
Mm-hmm.
on a consistency basis to base one, then you'll know how much money you will need to put in that position to make a quick $500.
Got it. Okay, that makes
Makes
sense.
sense. That's gonna be
Yeah.
like your cash flow. At least that's
Got
how it worked for me.
it. Okay.
Right? That's gonna be your cash
And
flow.
that took analyzing like the market trends, understanding when to
Oh, well,
come
yeah,
back
of course, that's
and
gonna
all of that.
be all
Okay.
of that put together, but that's why I like to focus on percentage because if you
Mm-hmm.
start seeing that your first target you hit consistently
Mm-hmm.
and you see on average the percentage,
Hmm.
then you put that dollar amount so you could get what you would like to make for the
Got
day.
it.
Or
Got
that, but yeah, and then we'll go to base two, then we go to base three, and then we go for home runs,
got it.
100% plus. But first, we learned how to bat, stop loss, base one.
Okay.
Okay, does that kind of candlestick make sense?
Yeah.
Let's look at Tesla. And I want you to tell me, actually, let's do this. Can you log in into your account?
Yes, I think I'm in my account right now. Yeah,
Okay.
I'm in
I'm
mine.
gonna have you share. Can you make sure it's also your account number doesn't show? So hold on. I want you to do actually hold on. Let me
Oh, my account number, I see.
pause recording. Now, okay, so now what I want you to do is click on, let's look at yeah, that's fine. The video is fine. So I'm gonna request remote control. Okay.
Okay.
So I'm gonna change the time frame to daily. So now I want you to tell me, I'm gonna highlight it. Okay. All right, now I'll let you go. So today, was it a bearish or a bullish day?
Which this is today?
Mm-hmm.
Bearish.
Mm-hmm. What was the high of NVIDIA today?
200
Mm,
or
yeah,
200.
yeah. And what was the low of the day?
What's this one at? 195.99.
Okay, where was it open?
199.
Mm-hmm. Where was it close?
Uh, 196.
Okay. Now let's do a green candle. All right. So what was the high of that day?
It was at 210,
Mm-hmm.
211.
211. Okay.
Low was at 199,
Open,
199,
close.
81, 208
Mm-hmm.
for the
Okay.
day.
Now let's go to the previous candle of that one. Okay.
Mhm.
Do you notice how those candles almost created like a ceiling, right? If you
Like
look
where
at
it stopped and was consistent.
yes,
Okay.
you see that?
Yeah.
Okay, so if you hover over on each candle, so what was the high of that candle?
203,
Okay. The high of the next candle over,
202,
the next one,
202,
the next one,
202.
the
One like
next one.
201.
Okay.
So it is like very,
Right?
it
It's
all
like
kind of
so this
hit
is
a high around the same time.
almost we're um advancing a little bit, but
Hmm.
that's how you're able to identify areas and the bigger time frames where it's pretty much where is price like hitting and can go above, right? Where is the candlestick hitting? What ceiling is it hitting? What price
Hmm.
area? And it goes back down, right? And it goes
Hmm.
back up and it comes back down. So that whole area
Yeah.
of the price area of 201, 202, for how many days we couldn't go above that price, 201, 202.
3, 4, at least 5 days. Yeah,
So
I mean, it
three
hit on the fifth day, it hit 203, but it's still within that range.
on the but this one, right? It so
Yeah.
4, yes, it still went back down.
Yeah.
It was the high, but it
Hmm.
closed down here. So it's
Yeah.
still within the range of this price. So
Hmm.
it's now same concept in the bottom.
Hmm.
See the wicks? Okay, this was
Yeah.
the 197,
Hmm.
197, 199,
Hmm.
198, 199. So from 197 to 199, we have a ground, we have a floor.
Okay.
So when price hits to
Like where
between,
it stopped, like where
it
it's not
stops it.
going
You
below.
visually could see
Yeah.
on each, because we're in the daily time frame, each and
Hmm.
single candle closes around, I mean, bounces, which
Hmm.
meaning think of it like a ball, right? If I
It
hit a
comes back
ball,
up. It
yep,
doesn't
if
go
I throw
below
a
that.
ball on the floor, what happens? It bounces.
Uh-huh.
If I throw a ball to the ceiling, what happens? It rejects.
Rejects come
So
down. Yeah.
same thing. So for 3, 4, 5 days, it was ranging between that price bracket. And
Got
that's
it.
what we're going to learn how to identify areas. These will become your high probability areas of where
Mhm.
to enter to play the
Because it shows
upside.
consistency within the market. Okay, got it, got
Exactly.
it. And then obviously you have days like, what was this, May or 4/24 that are like something boomed.
Yeah, yeah,
Okay,
yeah.
okay,
So this is pretty much now you understand. I wanted to explain that so you could see the importance of understanding candlesticks.
got it.
Give me a second. Um, so this is why it's important to understand candlesticks. Now came this candle, and bulls just took control
Hmm.
and ripped through that
Does,
ceiling.
does that mean a lot of buyers came in? Got it. Okay,
Exactly. So much buyers that we broke a new ceiling. And
got it.
we
Okay.
created a whole new, it took from what the ceiling was, which is around 202, 203,
Mhm.
it hit new high was all the way up
You
here.
hear that? What was that noise?
Oh, it was my market is closed.
Oh, 1 p.m.
Yeah, market. It's Thinkorswim and does that
I
automatically.
love it.
So you're
That's
gonna
so
hear
cute. I
that.
was like, what's happening?
So
I love-
it broke through that ceiling, buyers are in control. So what if you would every time, so think about this, every time you hit around this price range because you notice it was creating like a base, a support, and you would play
Uh-huh.
the upside. So imagine here, you would have just even made more money because it just ripped through.
Just shot
You
up.
made,
Yeah.
But
If you
your
just stayed
first,
in.
your target would have been first target up here always because
Uh-huh.
this is your ceiling. So you don't know, you really don't know if it's going to break the ceiling or not. So this is why
Got
you
it.
have to collect some profit. And if it
Mm-hmm.
looks like it wants to keep going, then we leave contracts. But if it doesn't, we just collect all of the money, all of the profits.
Okay.
Okay. So
Okay. That makes
it
sense.
makes sense why candlesticks are important.
Yes. Yes. So I'm going to continue reading my Candlestick Bible.
Yeah, it just now look at charts.
Now I understand a lot more and I can
Yeah,
just
right. You
analyze
can now
charts.
you're like you could see it and be like, oh,
Yeah.
you could play
Is
with
this one
different
of those
things.
things like once you get it, and then you just kind of become like smart at analyzing the market and
Yeah,
noticing trends?
yeah, you like obviously the if you could tell the candlesticks are very inconsistent. But
Mm-hmm.
what we're looking for is consistency. So this is why it's going to be important to look at different tickers.
Mm-hmm.
So we trade the ones that have good price action, that they've
Got
been
it.
solid. If there's a lot of like let's say we don't want to trade this. This
Okay.
is, this is like
That's an
maybe
emotional
right
roller
here.
coaster.
It's a lot, right? It's like, oh my
Yeah.
God. It's like I always tell, my students or myself, I'm like, if I have to think about it too much,
Mm-hmm.
I don't want it.
Yeah.
I don't, I should be able to be like, oh, this has nice candlesticks price action. Oh, yeah, we have a good ceiling. So I
Mm-hmm.
already know that if we break the ceiling or we break this floor to the downside, we're going to have a nice push up or a nice push down. So I'm
Got
looking for setups that
it. That
have
are like that.
price action that
Mm-hmm.
it shouldn't, your setup shouldn't be complicated. If you're complicated and trying to overthink it, then
Don't do it.
nope, that's like a rule of thumb for me. If I'm
Okay.
thinking about it, nope, next, nope.
Got it. Okay.
Kind
That's
of
good
like
to
you're dating, right? You
Yeah.
automatically start seeing these red flags and you want to try to
Bye.
work it out. No, no.
Yeah.
Let me go to the next shark. No.
Yeah, literally. On to the next one. Oh, I love it.
So, yeah, so we're gonna leave it at here with
Okay.
candlesticks. Let me stop.
Great.
Hold on.
Do you want me to stop sharing?
Yeah, please.
Okay.
Take a pause this.
And you can pause the recording.
Mhm.